The state of Illinois is the 5th most heavily populated state in the U.S., with nearly 13 million citizens. Sitting on one of Lake Michigan's few natural harbors, the state is one of the busiest port cities in the world, in spite of the fact that it sits more than 500 miles from the nearest ocean. With a mean household income of $54,124, most of her citizens qualify as middle class, and as a result, most face the financial benefits and problems of that economic level. While most of these people are able to pay their bills, afford a few luxuries, and maintain a decent level of credit, they are also in a vulnerable position should a financial emergency occur. If, for instance, the primary source of transportation for the household breaks down to the point where a new car is needed, the cost of getting a replacement could leave that household reeling. Where the cost of buying a replacement car is just too much for a family to afford in Illinois, car loans are the only way to make that sort of purchase affordable. For most people in Illinois who live outside of major city centers, a car is necessary to make it to work on a daily basis. A state that spans about 58,000 square miles, there's a lot of ground to cover, and most people just can't rely on public transit to get them from point A to point B. As a state that does a great deal of commerce, car loans in Illinois are easy to come by for anyone trying to replace a dying family car. With statewide interest rates just under 4%, the cost of financing is fairly reasonable for any car buyer who has average to perfect credit. However, people with bad credit will have to face higher interest rates in search for car loans. Where borrowers qualify for prime to non-prime car loans are concerned, the costs of car loans throughout the state of Illinois are going to be fairly reasonable on 36-month to 48-month. Risk amongst these people is minimal, and it takes some extremely rare circumstances for people in this credit category to not qualify for car loans, or get stuck with an interest rate that's several points above prime. Usually, it takes some poor decision-making with car choices, or who the car loan is purchased from. In these cases, a lack of research or unrealistic expectations are the culprit in someone with good credit paying too much for a car loan. Since people who qualify as having bad credit are considered a higher risk by lenders, which demands higher interest rates and lending fees to protect the lender from the increased threat of default, for those who are forced by circumstances to seek bad credit car loans, there are strategies that can be used to make car loans less painful. Shopping for lenders is a place to start. All lenders are part of a competitive market, which means they do whatever is necessary to bring more business through their doors while still making a profit. While subprime interest rates on a 48-month car loan can climb as high as 16%, there's no requirement that a borrower pay that level of interest in a state like Illinois, where hundreds of lenders do business. With some careful shopping, a borrower with bad credit can find car loans with rates as low as 5%, a definite bargain when money is tight. Illinois is covered by thousands of miles of roadway, and the state experiences nearly every sort of weather condition, both of which can beat a car to death before its time. This is why many people will be faced with having to replace their car without the funds to pay for it. To cover the cost, many will resort to getting some sort of financing to make their purchase possible. In Illinois, car loans are available to anyone at any economic level, and for new and used cars. Where hundreds of banks, credit unions, and loan specialists do business, there are car loans for every customer. Federal Auto Loan. Good credit, bad credit, no credit, all good.